Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
The Hang Seng is down almost 1.5% as we speak. The similar story playing out for the Taiwanese index as well. That too is trading with losses of a similar quantum.
With no impact in the volume, if the volume remains the same, put together it may fetch us around 15,000 crores or so.
I'm very confident that this panic reaction is possibly for the day, and you will see a lot of positivity in the days to come.
I think what was expected was some help on the equity taxation front, perhaps at the margin. But what was absolutely not expected was it going in the reverse direction, which is the STT hike.
And the government should look and the system should look at the market as an independent sector also. In addition to saying because it helps data centers, it will help the market.
The market's opening, what do we have? First rates coming through, 60 points lower on the Nifty, 24,750.
Markets have reacted since yesterday as though the retail investors have made a lot of money in the last 25 years in derivatives, which has never been the case.
There's clearly some work to be done there. I think 10-year yields should be, closer to 6 and not 6.76 is my view.
I'll start with gold, and this was the biggest one-day decline on Friday that we saw since 1980. It was down by 17%. It's trading down by 5% right now as well.
You know, the Nifty is down about 60 points, below that 24,800 mark as well. The sensex not doing particularly well. Mid-cap index, the market breadth out here tells you the story of the day.
Funding of the R&D, better clinical trials and infrastructure, getting faster approvals are all going to be good from an overall perspective, and it will help us to stay competitive in the high-value therapies.
While the Nifty has managed to see a bit of a comeback, it's the mid-cap and the small-cap index that continue to sell quite significantly in the session today.
Okay, well, I think I'll do a retake. Markets seeing a bounce and it's 100 points. Just see the kind of stocks which are moving up, right? Reliance Industries is up about 2.5%. Power Grid, Adani Ports, a fair bit of infra and old economy names out there. I must say, market breadth is yet to catch up. As the last I checked, about 2.5 is to 1 in favor of declines right now. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, Nigel and Reema with me. Hi, afternoon.
Hi, afternoon. The mid-cap index is pretty flat. Softness is seen in many of the technology heavyweights, maybe tracking the cut that you saw on NASDAQ. So IT names are under pressure in terms of defense. For the second day in a row, many defense stocks are weak in trade. So Bharat Dynamics, Cochin Shipyard, Hindustan Aeronautics, weak in trade. And textiles too. Names like Gokuldas Export are sulking.
Well, that's right, Reema. And if you look at the advanced decline ratio, yes, it's in favor of the number of stocks that are declining, but actually the lines have got a little closer to each other, which is heartening to see, because at one point of time, we had only around 450, around 500 stocks that are advancing. So that crisscross actually has taken place. And the mid-cap index, as we speak, that's moved into the green. So that's pretty good news. But there are otherwise big gainers. Vari Energy, Premier Energies, both of them flying away in trade. Even some of these, plays like the data center play, Anand Raj, that stock is flying away. That's doing pretty well. GMR Airports is up, and we've seen a big recovery in silver prices as well as in gold prices, and that's why you have a stock like Manappuram Finance that's recovered from the day's low, and Hindustan Zinc as well has regained its mojo. So pretty good stuff, guys. I mean, not such a bad outcome when you're preparing for a manic Monday.
And even these capital market plays have recovered, right? Angel, BSC and Nuvama Wealth all up 3-4%.
Absolutely. Let's just quickly run you through what's coming up here on the show right now. So, okay, I think we have Mitesh with us, so we can, I guess, directly go across to him. Mitesh, if I can come to you, what does one do right now?
Yeah. So, Prashant, I think, on the index, as I said, there could be a bounce back to about 25,000 levels. We are kind of attempting that. Let's see if we can close above that. Then, we'll look at further extension. But for the timing, I have a sell on Infosys. I think some kind of profit booking signals are emerging here. So keep a stop at 1644. Look for targets of 1580. And ONGC is a buy with a stop below 246.5 for targets of 264, sorry.
Okay, all right. Those are specific trades. Mitesh, thank you very much for that. And we'll come back to you for more. Well, we have one of the top equity strategists in the country join us now to take us through what he's and what he made of the budget which was announced yesterday. Rhythm Desai needs no introduction, Managing Director and Chief Equity Strategist India at Morgan Stanley. Rhythm, good afternoon. Great to have you with us here on the program. Thanks very much for joining us. I remember reading your pre-budget note, and one of the things you said in the pre-budget note is markets are not expecting, but they'd be happy with some kind of relief with regards to measures which may reverse the FPI outflows, right? I mean, you didn't say anything specifically, and I think this STT thing, which has been going on since yesterday, was a bit of a bolt out of the blue. It went in the other direction. I think that's kind of overshadowed the pragmatism and other things in the budget. Maybe unfair, but, well, that's what it is. Your first take, Rhythm, how did you see the budget and what it means for the market on a durable basis, if at all?
So, Prashant, thank you for having me, and my apologies, I could not make it in the morning. So I think let me just step back from your question. By the way, that what you read was on the front page, and inside I had explained what would reverse this. So we'll come to that in a moment. But ultimately, your viewers should understand the budget is a statement of the government's expected income and expected expenditure. And there are two ways of approaching this. You can make some aggressive assumptions and overestimate income, underestimate expenditure, and come up with a very rosy scenario, or you could do the opposite. Now, the government has chosen to do the opposite. It has estimated its income rather conservatively. You can see this line by line. It's expecting a 10% growth in corporate tax revenue, which I think is super conservative. It's actually budgeting for pretty aggressive growth in expenditure. And therefore, I would say that it has erred on the side of caution. And the likelihood is as the year progresses, it may find itself beating its estimates, which actually augurs well for all the markets, which is equity, bond, and currency. So that's the first comment. The second comment, which I made earlier today, today and in fact over the past few days, is that in my 35 years of doing markets, actually slightly more than that, I am sensing right now, and I'm relying this purely on memory, so take it with a pinch of salt. This is the biggest disconnect I'm seeing between the macro and the market. So the macro actually looks pretty good. I mean, look at the auto data that came out yesterday. It would suggest that we are in a recovery in growth. If you look at macro stability, things are actually quite benign. And in contrast, if you look at markets, whether it's the equity market, the bond market, or the currency market, they seem to be suggesting that India has some big problem on its hand. So this disconnect, I think, is certainly something to ponder over. And markets don't go wrong that often, but this time around, I'm quite convinced that the markets have underestimated what India is up to. So I think that's the second comment. And coming back to the overall comment on the budget, I think the budget actually addressed quite a few strategic issues, whether it's with respect to AI, whether it's with respect to services, or the focus on defense. I think it nailed quite a few issues, and in fact, even simplification of taxation. So in my view, this was a very good budget in both senses, in the sense that it doesn't overextend or overestimate things, and in the extent of the policy that it's delivering, which is a continuation of what we have seen over the past few months. Now to your question about FPIs. So clearly we are from the capital market, so we get very narrowly focused on what is the government doing about markets. And the last thing we want is them to do something that spooks the market. So unfortunately, the STT increase has spooked the market. And this is a little harder for people to understand, those who are not in the market. I mean, why would a 12,000-15,000 crore increase in a tax caused such big damage to market capitalization. And the reason is very simple. For those who are not in the market, is that the markets function on sentiment first and then fundamentals. And the sentiment was already weak going into the budget. In fact, if you look at India's relative performance in the 30 days in the run-up to the budget, this was the worst ever that India had. And it was going to be so hard to disappoint the market, but the budget managed to do so despite it being such an excellent budget with a little small change. So, that's the nature of markets. Markets will go through this and may probably, when fundamentals assert themselves more strongly, this will be forgotten and over. But on your comment with respect to FPIs, I mean, it's something that I've been talking about for a while now. And actually, it came through in the budget. So our suggestion was that the definition of FPIs should be liberalized, and that has happened. So persons residing outside India, PROIs, are now in a position to buy a lot more stock in India than they could do before. Now, the next thing, which I think was a very important line in the finance minister's speech, and I'm not sure whether that's got enough airtime, was with respect to the modification to FEMA on non-debt instruments. So you can say non-debt is not very different from equities. And I would be eagerly waiting for the RBI's announcement on this, because it's okay to allow foreign investors to buy. The process has still been onerous for them. And if FEMA delivers a simplified process, then I think we've opened up the Indian markets to a completely different capital pool, relative to history. Historically, this market has attracted largely emerging market pools and to some extent global pool, but not HNI and not other pools of capital, which is what this budget has done. So yeah, it's a material change, but it has to be seen together with the proposed modification to FEMA, which I think we'll learn in the course of the next few days.
Rhythm, just one more question from my side. I know you've interacted with a range of investors, right? Could you tell us, we've also had a bunch of conversations here, and most actually large money managers are kind of sort of sidestepping this STT issue as a sentiment negative. But sentiment, as you said, is important. Those outside the market perhaps don't understand it to the degree that we kind of sort of obsess over it. But what's the feedback? And I mean, my question really to you is, where does the market go from here? Are we in for more of the same? I mean, the start to 26 has been pretty tough. And the, hope was that maybe this will change things a little bit around. What's your sense?
So see, Prashant, I come from a fundamental perspective. The relative multiple on India is now close to its lowest level ever. And it only got lower than this in October 2008 in the middle of the global financial crisis. So India has never been cheaper than this before. If I look at the fundamentals, they seem to be on the mend. And do not underestimate the amount of stimulus that government and the central bank have put into the economy over the past few months. We've had 125 basis points of rate cuts. We've had unprecedented liquidity infusion and more coming. We've had banking sector deregulation. We've had 2.5 trillion rupees of tax stimulus. And this wasn't a crisis. It was a plain vanilla slowdown. The policy response has been very large. So it's almost inevitable that India's growth turns this year. And therefore, I think for those who are, and that's what stock markets require. They require courage at times when we are dealing with very bad sentiment, to take a contrary view and to stand up and say, no, I'm buying this. I think 12 months out, the results will be quite good if nothing untoward happens in the world. So I think that's my primary position. With respect to sentiment, so there are two ways of looking at it. Sentiment is very critical. Let's not underestimate that. Not necessarily market sentiment alone, but sentiment overall. Because it determines how consumers behave. It determines how investors behave. That's how simplified the world is. When I get up in the morning and I feel good, I go and make a purchase. It may be of a car, it may be of a new wallet, it may be of anything. And if I'm not feeling good and if I'm depressed, even if I have the money in the bank, I decide not to do it. So it's important to handle sentiment. It is actually a leading indicator of the economy. So the risk from this STD increase is that it takes the market sentiment down a notch, and then ultimately the reflexivity of markets into the economy mean that it drags down the economy. And that is why I think there is a slight worry about this. But otherwise, I think the fundamentals are supremely good right now. And I dare say India actually enjoys the best fundamentals amongst large economies in the world.
But today, at least, markets seem to be settled. So day one after the budget, we aren't seeing that overhang of STT play out in the markets. Rhythm, afternoon, and thanks so much for joining in. Rima here. So data center sector has emerged as the big winner of this budget with tax holidays till 2047. Share your views on what has transpired, what's happened in the budget, and actionable investable ideas basis this.
So see, I think one of the reasons why investors were avoiding India, global investors were avoiding India, in fact, there were, I would say, three reasons. One is India's growth slowdown that started sometime in the last quarter of 2024. The second is India's extremely rich valuations relative to emerging markets in the world at the end of September 24. And the third is the lack of any immediate AI trade. Valuations have got fixed. I think growth is getting fixed, and we're going to get surprised to the upside. So the only thing remaining on the table was AI. Now there are 5 ingredients to AI. You need energy, they power the data centers, and then you need the supply chain, you need skills to convert that into some useful product, and you may or may not need an LLM, and that's an optionality. Now this budget actually goes around fixing 4 of these 5 things. So outside of the LLM, it has fixed the viability of data centers. I think India is probably one of the most attractive places on the planet now to set up data centers. This tax holiday has really sweetened it. So we've already seen tens of billions of dollars being announced, and I won't be surprised if these amounts go up materially in the next few months. The budget looks at the supply side issues quite intently, and we're talking about semiconductors, we're talking about rare earth. So all of these things go into the whole AI trade. It's certainly taken care of the energy side. There's a lot of incentives that have been rolled out, and I'm very bullish on the energy sector. So, and of course, skills. Do not underestimate the importance of the safe harbor for IT services. India is the place on the planet where you get skill at scale of very disciplined people at pretty low wages. It is unprecedented. It's an unprecedented advantage in a world that's trying to build AI-led solutions. So we have got the ingredients now, and I think as investors smell the roses, they'll wake up to the next big AI trade, which is India. Okay. So I think the budget has done a great favor, actually, to the market in that sense.
All right. Hi, Rhythm. Good afternoon and good to see you, Ben. I think in the morning you couldn't join us because there was a meeting with Minister Goel, if I'm not mistaken. I was looking at the gram and I think he uploaded some photos. I'm guessing that was earlier today. That said, you're impressed with the budget. You're optimistic that earnings pick up from here on as well. I think with regard to sentiment, that India-US trade deal is something that markets are looking forward to. How big a sentiment turner is that? Because there is some optimism that's been creeping back in the last few days, Rhythm.
Yeah, that's also an important thing to the sentiment. And I guess it's only a matter of time that the trade deal happens. I think a lot of work has happened in the background. I'm not privy to anything. I'm just guessing. But it's almost inevitable. And I'll tell you why I'm saying this. It's because of Pax Silica. So do not underestimate the importance of Pax Silica. And India is on the table in Pax Silica. So for those who had this view that India is no longer a strategic partner for the US because of the events of the past few months, need to revisit that view, because India is part of the most important thing that America is doing right now, which is Pax Silica. India joins the Pax Silica, I think, in the next 2-3 weeks, or maybe in March. And that, I think, is a game changer. So it reorganizes the whole supply chain around modern technology, and India is going to be part of it.
Okay, all right.
So I think that gives me optimism that the US trade deal should be somewhere around the corner.
Hopefully, I'm quite optimistic as well on that, Rhythm. Final question, Rhythm, before we let you go. As we know that India has underperformed as a market, and the US market has done very, very well. Valuation-wise, that market as well has gone to a bit of a premium in comparison to its averages. What's the likelihood that we see the global markets actually see a bit of a correction? And if whether or not that happens, do you believe India, irrespective, will outperform post the recent months of underperformance?
I think that's a very good question. I'm not the competent guy to answer what happens to the world, but I can make an observation to you, which is, I think, useful in assessing this.
Yeah.
If you look at the four major economic blocs in the world outside India, the US, the Eurozone, Japan, and China, each one of them is stimulating their economy as we speak. Three of them are doing it with both monetary and fiscal policy, and one of them is doing it with fiscal policy. Now, that hasn't happened since the global financial crisis. It's a synchronous stimulation, and there is no crisis that they're reacting to, but they're probably reacting to the reworking of global trade. And this is a pretty, you could say, reflationary environment that we're living in. So that's one point I'll make. Morgan Stanley as a house is quite constructive on equities as an asset class in the US included. So it doesn't look like that the global markets are in for any durable correction immediately. So I think that's the global backdrop. It is a worry for India if there is a recession around the world, but that's not our base case scenario.
Yeah, I mean, I could go on, right? Lots of questions, gold and silver. I'm not sure if you have a view, Rhythm. That's the other chatter. And oh boy, what a move we've had.
Let's get Rhythm's view on that.
Rhythm, you want to weigh in? Gold and silver?
No, see, I will say what I say about gold and silver is that unlike what people think, they're not assets. They are stores of value.
Yeah.
An asset, by definition, is something that yields an income, like property, like equities, like bonds, like fixed deposits. Bitcoin, gold, and silver don't yield. Well, silver, I'll keep that aside because it's an industrial commodity. But gold and Bitcoin don't yield any income. They are stores of value. And their fair price is what is basically dependent on the price that the next guy in the line is willing to pay. And that's a very hard thing to predict.
Yeah,
that's all.
It could be. That's absolutely right. But central, there's a chase, right? And it's being led by central banks. Almost price agnostic buying, as we've seen both. Actually, gold. Not so much
Prashant,
yeah.
the RBI bought 70 odd tons in 2024.
Yeah.
Of gold. It bought 4 tons in 25.
Yeah.
So again, you got to question this thing about, central banks are buying. I think people need to go and check the data.
Yeah. No, but I mean, we have data which shows that Western central banks are buying, Rhythm. Maybe we have, and gold is actually, Rhythm, the RBI dividend is superb this time because of gold and dollars. Those are assets on RBI's balance sheet, right?
Not because of gold, but because of dollars, because it's a function of the income they earn.
Yeah.
So gold doesn't earn any income, but yeah, that's true. Yeah, that's happening in the world, and people are looking for alternate stores of value away from paper currencies, and that's an ongoing thing. But I have no ability to tell you where gold is going next.
All right, Rhythm, we'll leave it there. Thank you very much for joining us. It's always a pleasure. And that headline stands out. This is the biggest disconnect between macros and markets. On a relative basis, India is cheap, never been cheaper. And 12 months out, investors who have patience, who stay in perhaps, will be happier compared to where we are right now. Most definitely. We'll take a quick commercial break here. Deepak Shana is going to be with us on the other side, and we'll ask him what he's been doing. I mean, Deepak, of course, is also someone who has been writing quite a bit about the budget, the nuances, and so interesting conversation lined up next.
Welcome back. You're tuned into Closing Bell here on CNBC-TV18. Just take a look at the markets. Wow, pretty good, huh? Nifty is up close to around 200 points. We've made up half of yesterday's losses, so that's good news. The mid-cap index, that's the beautiful one in there. That's recovered more than 2% from the low point of the day. Currently up close to 0.3%. And the Nifty Bank, don't leave me out, it says, that one in fact has recovered as well from around its 100 DMA. We have some news that's flashing for you on the screen. UPL's numbers are out and they appear a tad bit better than what the street was working with, at least on the revenue front. We'll wait for the operating profit as well. But for the time being, UPL reacting positively to those numbers. We'll get a quick analysis on that particular name. The EBITDA number should come up for you in just a bit. But we have Deepak Shenoy who joins us on the show. Hi Deepak, good afternoon and good to see you. Lot of debate with regard to this SGT. You know, for that 15,000 crores of additional income, lakhs of crores of market capitalization eroded. How are you, what's your argument with regard to this? And it's clearly been a sentiment dampener, but you've got a couple of points on that. Please go ahead.
Yeah, no, quickly, Nigel, I think the SGB's change in taxation is primarily around paying that 12.5 or 20% capital gains tax. Now, if you sold it even now, even if the rules weren't changed, you will still pay that tax. So it doesn't make sense to sell it right now and try to game this system, because there's no point trying to sell it. If the price is actually below the market price of gold, you're going to pay that 12.5% tax, and that's fine. It's a fairly large increase in taxation. A large increase in price of gold from the time most people have bought this SGB. And you should just consider it now as a kind of a taxable asset. There's also an income associated with this.
Right. Deepak, actually, I want to ask you about the STT. That's the one. Yeah.
I heard that wrong. I'm sorry.
No worries.
Okay. STT is, so STT, stock futures are dominated by arbitrage funds at one level, probably FPIs at the other level. So it's not really as much a retail product. Index futures perhaps are. And what happens typically is that because ARB funds tend to short futures every month and roll it over, you will find that there is an impact on the returns of arbitrage funds going forward now. As a disclosure, we are also launching an arbitrage fund, but regardless of this change, it is probably still more tax efficient to park short-term monies as either an individual or even as a company in a short-term, like an arbitrage kind of a fund. If you have it's a slightly higher risk product in comparison with something that's like a pure liquid fund and so on. But the post-tax return is substantially more attractive. So I think even with this, which will hit you by maybe 0.4 to 0.5% lower in terms of returns, part of that will probably get adjusted by market changes when volumes change, and therefore demands for liquidity will also come in from from the ARB funds will probably demand slightly higher premiums as well. But at the same time, this may not affect your retail population quite that much. The option price STT increase is 0.125 to 0.15% or 0.015%. It is so tiny that, for the person that is actually speculating, doing this one lot, two lot option buying, it's ordinary, very, very tiny in terms of the differential for a 3,000 to 5,000 rupee premium that they typically pay per lot. The impact is going to be very, very marginal, of the order of, single-digit rupees. So I would say, it doesn't affect the speculator that's going and punting on like one or two lots of Nifty options, buying it or something like that. But it does impact larger institutional players like ARB funds and FPIs a whole lot more. I don't think there's going to be a major amount of changes in since the whole market is impacted and the tax advantage still remains. I don't see major either outflows from our funds or any changes in the FPI schedule, because FPIs buy futures first and then convert it into stock when they want to buy a stock, because the impact cost on the futures is far lesser in general than trying to buy a large volume of stock.
Got that. But particularly for ARB funds, arbitrage funds, what will be the impact? And will it dry up the market?
Yeah, I don't think so. I think it's, 0.03% per month is the increase, right? So there's no cess and all that on that. So you're effectively saying 0.36% per year is the differential. 0.36, and then you assume some market dislocations, maybe 0.4, max 0.5% impact on an ARB fund volumes, and perhaps even lesser because ARB funds have only about 70% of their positions in stocks and stock futures, right? So that impact maybe at 0.5%, I think is the highest you'll see. Probably be of the order of 0.3, 0.4% overall. But that's not meaningful because your yields in the market right now on ARB funds have been around between 6.5 to 7%. So that drop in return, if it actually happens next year, will be relatively small in comparison with the yields that you're getting, and the tax impact is not. So I don't see a major outflow meaningful over here. If STT was raised to like 15 basis points, 30 basis by 15 basis points to 30 basis points, something like that, then I think, yes, that would make a significant difference. But I don't see that happening. It's just 5 basis points right now, and it's only on the sell side. So you don't have to pay it in both directions. That's also an important thing to note. I don't, and remember, stock STT hasn't changed. Futures exercising into stock, that has also not changed. So therefore, I don't see a major impact on volumes or in arbitrage fund AUM in that sense.
Yeah, I mean, lots to talk about, right? Maybe we need a 30 minutes primer special with you, Deepak. Dinesh Kanavaru was here and he was saying, well, he was half joking. He said, well, great news for tax experts and consultants. There's some 90 changes he was telling us. Before the new tax code it comes into effect, some 90 changes. So, and I think we'll discover some more important ones as we kind of go along. But I think the big ones we already know in that sense, right? But this time it all comes through. Thank you very much, Deepak, for joining us. Good speaking with you, and more later. Appreciate your time here on CNBC-TV18. By the way, the tease up on the screen, FM's first post-budget interview today at 8 p.m. Network 18's MD and CEO Rahul Joshi in conversation with Nirmala Sitharaman, the finance minister of the country. That's a conversation you don't want to miss tonight at 8 o'clock. We take a break. We are back. The news at the bottom of the screen is what we want to address when we come back. Stay tuned. Well, news at the bottom of the screen. This is PE firm, and it's a very large PE firm. Advent International is likely to be infusing money into Aditya Birla Housing Finance, which is a subsidiary of Aditya Birla Capital. My colleague Rachna is here with what she's gathering from her sources. This is a CNBC-TV18 exclusive. Rachna, take it away.
What we've gathered from our sources is that PE firm Advent International is set to infuse around $300 million into Aditya Birla Housing Finance in exchange for a minority stake. Now, sources say that this will be a primary capital infusion aimed at strengthening the lender's balance sheet, improving capital adequacy, and supporting the next phase of loan book growth. Aditya Birla Housing Finance, as we know it, is a wholly owned subsidiary of Aditya Birla Capital, which has been scaling up its retail and secured lending businesses as housing demand remains steady across urban and semi-urban markets. Now, speaking of this deal, we understand that that Advent investment comes against the backdrop of multiple capital raises at the housing finance arm. In January 2025, the company raised about 830 crore rupees through the International Finance Corporation through non-convertible debentures, largely to expand affordable housing lending and priority segments. Separately, Aditya Birla Capital has infused about 249 crore rupees into the subsidiary to fund growth and improve leverage ratios. And now sources say that this equity capital would provide Aditya Birla Housing Finance with balance sheet flexibility, allowing it to grow without overstretching leverage at a time when funding costs remain elevated and asset quality vigilance is high. Both Advent International and Aditya Birla Capital have not responded to our queries. We will be keeping an eye out.
Okay, well, that is an important story that we are picking up at this point in time. And I think the board meeting for numbers is tomorrow. the board meeting for the third quarter results. We'll see if this is announced along with it or this is done separately. But so many transactions in the financial services space, one after the other, and this is the latest coming through. 100% subsidiary of Aditya Birla Capital. Stocks, by the way, come off quite sharply, Aditya Birla Capital. If you just look at, say, the last 1 month or so, I think we have seen a fairly sharp fall. I mean, I think 370 rupees was the high that we saw recently on the 6th of January. And it's at about 330 odd rupees or so, 331 as things stand right now. What percentage equity, how will that value Aditya Birla Housing Finance? I mean, I think those are the details which, of course, also will matter as we go forward. There's one more story which we are breaking at the bottom of the screen. This is PB Fintech, which is likely to announce a fundraise via a QIP. That is, again, a CNBC-TV18 exclusive. It's source-based information, and it's likely to raise this money to fund an acquisition. PB Fintech, of course, is corrected again quite a bit from the highs of 2,000 rupees plus. But I mean, all of that, of course, was with regards to concerns around distribution, commission costs being under pressure and the regulatory lens on it. But this is, of course, the information we are picking up on PB Fintech. Our colleague Yash should be with us in a bit from now to take us through more details. Well, let's talk about, I think it's the right time to talk about the chatter, right? And what Nimesh is answering and picking up from the market, the feedback. Nimesh, 250 odd points on the index, 25,080. What are you picking up?
Well, Prashant, honestly not surprised with the kind of move we've seen in today's market. It looked very oversold the way yesterday the Nifty and the broader markets collapsed. The PCR had fallen below 0.6. And, everybody on the street was negative and they were expecting that FIs will be big sellers today. Surprisingly, that's not the case. FIs aren't large sellers. In fact, there is a small buying, what I understand. So it's quite mixed, is what I understand from a flow perspective from the larger FIs in today's market. There is a bit of small buying as well in select large cap names. The selling is largely into private bank names in today's market, some of the NBFCs, and to some extent a bit of profit booking in the defense names after the budget. So two sides stands out on the negative side is financials, especially the private banks and some of the defense names. Technically, I'm told there could be a counter trend rally, which is quite possible because it's so oversold from a technical point of view. So that's the other feedback. So clearly, a pullback from extremely oversold levels, but at least the fear of large FI selling doesn't seem to be in today's market.
Okay, all right, Nimesh, interesting times. I'm wondering by the end of today whether we'll see a small buy number from the FIs and maybe some short covering. That'll be really something. But what about individual stocks, Nimesh? What are you picking up?
So the first on my list is Shriram Finance. It's been under pressure today, and there is a reason for it. There is aggressive selling from larger FIs in Shriram Finance today. So expect high delivery volumes, but on the sell side, I said, generally within the financial names and NBFC, there is selling pressure, and Shriram Finance stands out in terms of one of the most bigger name where there is large selling today. So that's the first name. The second stock is Northern Arc. Even that is under pressure today, but I understand there could be a large block deal in Northern Arc very soon. So that's the reason why maybe a bit of overhang, and that's the reason why the stock is under pressure today. Lastly, couple of names where is delivery-based buying today: HDFC AMC as well as Hitachi. HDFC AMC stands out because there is so much of negative news flow towards the capital market names, but HDFC AMC stands out in terms of buy flows, and also Hitachi is buzzing in trade, small, but there is buying interest at these levels in Hitachi as well.
Well, no dearth of chatter, right, Nimesh? Markets up, down, the chatter.
And there is anyway there is going to be a large deal today evening as well, possibly. So watch out for that as well.
Yeah, absolutely. The PB Fintech news, of course, still flashing there, and we should be able to speak with Yash on this as he's breaking the story at this point in time. I think we can go across to Yash now. Yash, tell us, what are you picking up?
Well, quite an interesting transaction that we're looking at as far as PB Fintech is concerned. What we've been given to understand from our sources is that PB Fintech is likely to announce a large fundraise, and this fundraise could be via the mode of QIP. The funds which the company is looking to raise at this point of time are likely to be used towards the acquisition of an entity which we've been given to understand from our sources is on the international side, in an international geography, but is likely to be in the same business as what PB Fintech does in India, that is insurance products aggregation and insurance products selling. This is likely to happen over the next few days. Of course, the announcement expected soon, on the fundraise, and then eventually the purpose of the fundraise, which is likely to be the acquisition of another international insurance aggregator. PB Fintech itself has large amount of cash on its books. If it's still raising more cash via QIP, this is likely to be a large acquisition which the company is expected to make. We've written to PB Fintech on this particular development. The company, in fact, reports its numbers today evening itself. There could be some clarity which could come on that earnings call from PB Fintech today. But as of now, on this story, on this development, there is no response from the company as of yet. We are still waiting for a response from PB Fintech.
Thank you very much for that. Mitesh is now joining in. Mitesh, the rally is getting stronger now. Approaching 25,100. What's the trade?
As I said, about 25,000, I think there is a chance of a stronger pullback, and we could now see 25,350, 400 zones possibly. On the stock side, I have BTST on power grid. It's a very bullish candle happening over there. So take a BTST with a stop at 267 for targets of 275 thereabouts. And PG Electronics is also something which is reversing. So BTST with a stop at 554 half for targets of 570.
Okay. All right. Thanks a lot for that, Mitesh. By the way, the market's definitely taking note of both those two stories that are coming there. From Rachna first on AB Capital, the stock has spiked up, one of the outperformers in an otherwise dull 2025. And post Rachna story, actually, that stock has taken a bit of a leg up. I think we should get that one up for you on the screen, currently at the high point of the day. And the other one is the QIP on PB Fintech for an inorganic growth, despite sitting on a lot of cash. QIP normally comes in at a bit of a discount. So I guess that's the reason why that stock as well is correcting. Market taking note of both those two stories that were just broken on CNBC-TV18. But time to talk about stocks and get some ideas. Amrish Malika joins us on the show. Amrish, it's that sort of a day, right? Surprise, surprise. The mid-cap index now up close to around 1%. Beautiful move out there. The mid-cap index is calling for attention, and the advanced decline ratio is pretty much even Stevens. Good time to get in a pick from you. What's the stock on your radar, Amrish?
Yeah, Nigel. See, I've been talking about the budget. If you've seen in the last 10 years, the effect of the budget does not last beyond 1 or 2 days. In the last 10 years, only 2 years, 2016 and 2021, that we saw the budget effect lasting much longer than that. And this time we have seen just 1 day. Just yesterday, we saw that reaction this morning a bit, and now we are back to normal business. So my pick now would be Uno Minda, which is a global tier 1 manufacturer and supplier of automotive components and systems. Product portfolios across 25 categories, mainly automotive switches, lighting, casting, seating, and acoustic. And in the new segment, they have EV-specific products, sensors, controllers, ADAS, and blow molding products. And catering mainly to two-wheelers and passenger car segment, but now they're also focusing on CVs, three-wheelers, as well as off-road vehicle segment. Mainly supplying to OEMs, but the replacement market also is growing quite fast. Globally, 75 manufacturing facilities. There are more than 37 R&D centers, and the new EU trade deal. This also should be positive for them. Q2 numbers were better than expected. EBITDA margin was about 11.5. Strong, growth in aftermarket. Now, I believe the Q3 numbers, which should be coming on 5th of February, should also be in line. Also benefited from premiumization and increase in content per vehicle. So next 3 years, revenue CAGR is expected to be about 15%, EBITDA CAGR to be about 16%. Expected EPS for FY28 should be around 29 rupees, and my target price is 13.92.
That's Uno Minda for you. Amrish, stay with us. Coming back to you, look at the flashes at the bottom of the screen, right? Gold is up 7% from the lows. Silver is up 15% from the lows. So back at about 82. Why not go and bring in Manisha to tell us what's happening? The commodity market, MCX will trade a lot longer after we are shut. But it'll be top of mind when we come back tomorrow with international prices, of course, also at play. Manisha, tell us what's happening.
Well, yes, it continues to be very, very volatile when you look at especially gold and silver prices therein. At some point in time, we are 15% down, then we are 6% up. There is buying on the lower levels and a sell-off in every uptick that you're looking at in many of these prices as well. Let me take you through some numbers then. And on 1st of January, the gold prices were trading at $43.30 an ounce. We saw a record high of 29th Jan at $5,600 an ounce. It's trading at $4,600 an ounce, so $1,000 has been shaved off in the matter of 2 days there. Same is the case with silver. We started this year with $71 an ounce, went on to make all-time high of $121 an ounce. It's trading at around 70 to 80 between that at this point in time. So a very sharp decline coming in for this one as well. If you look at the Indian markets, you can see the declines coming in much, much sharper. So 29th Jan is when we saw an all-time high in case of silver at 4,20,000 rupees. Today's low is 2,25,000 rupees. So we've seen prices actually go half in matter of just 2 trading sessions. Take a look at the gold prices. 29th Jan, the prices hit an all-time high of 1,80,000 rupees. We are trading at 1,37,000 rupees today. So very sharp declines. And when you put this in number, from the record highs which were seen on 29th of January, well, gold has come off by 24% and silver is down by 47%. That is the kind of decline that we are dealing with right now, with markets suggesting that there is some more profit taking that you could be looking at in gold and silver prices. But then again, most banks and brokerages have stayed their higher targets for the year end. Most believe that further highs in gold and silver are still awaited right now.
Manisha, thank you very much for that. So that's gold and silver, very volatile, lots of bounce coming through. Power grid. Sorry.
No, just take a look at the metal index. You know, the metal index has seen a big recovery from the lower stocks like Vedanta, Hindustan Zinc, Hindustan Copper. All of them actually have seen a big spike up. In fact, Vedanta, I think, is one of those stocks that has recovered considerably from the day's low. It's up only around 1% right now, but intraday chart will tell you the picture. And Hindustan Zinc now at the day's high, up close to around 7%, got slammed in last 2 trading sessions, pulling back some part of that. But Prashant was just telling us, we'll hop across to Vivek to tell us about Power Grid, one of the top volume gainers today. Vivek, what's going on there?
Well, when was the last time you saw a utility like Power Grid, move up so significantly? This was after the company held its Q3 FY26 analyst meet. The company, just before the analyst meet, uploaded a presentation, and against all expectations, the company actually has gone ahead and upgraded both the capex as well as capitalization guidance for FY26. The company has said that it is on track and they are poised to exceed annual guidance. In the analyst meet, they've given more granular details. Remember, the company's earlier capex guidance was 28,000 crore. The company's capex at the end of January stood at 29,200 crore, and they're expecting it to go closer to the 32,000 crore mark. Along with that, when you're talking about the earlier capitalization guidance, it is at 20,000 crore. At the end of January, it stood at close to 18,700 crore, but they're expecting it to go closer to the 22,000 crore mark. Very positive takeaway. Along with that, they also mentioned one word as far as the Chinese threat is concerned. They downplayed it significantly. They're saying only the existing transformer capacity could come on board, which has also led to a bit of a relief rally across most of the transformer names like Hitachi Energy, etc. So positive for Power Grid as well as quite a few other capital good names.
All right, Vivek, thank you very much for that. Well, what's the last time you saw 8% move on Power Grid? I think you have to go back to a guidance increase in the past because it's happened before, and it's happened now. But 271, 272 on a Power Grid. Market's doing very well. 270, very nice bounce. So you're basically recovered about 3/4 of yesterday's losses with this bounce, and 25,100. Is where we are at right now almost. Well, a lot of veterans, market veterans we spoke with. Samir Arora, we had S. Narain, we had Neelkant Mishra on the strategy, markets ahead. So this is perspective on the budget, but more importantly, markets now that the budget is behind. Listen in.
On Twitter, hundreds of times I have said that STT should be increased on futures and options, but always accompanied by a corresponding lowering of either capital gains tax or lowering of STT for cash or doing something. So that's why this one is that we are not accepting the fact that if you get, say, $5 billion through some FDI with doing hundreds of things, you can get it in 1 hour with the FPI guy if you understand the power of the market. I would think that because they were selling in that context at that time, we should not be doing things which are negative, because this means they will not change currently. Now, after 5 days, 10 days, 20 days, if there is a US deal or something which changes the sentiment for India relative to other markets, then it'd be different. But right now, how will that momentum stop?
the way markets have reacted since yesterday is as though the retail investors have made a lot of money in the last 25 years in derivatives, which has never been the case. In fact, the regulator prepared a long document showing how much money was lost in derivative segment. But the market reaction since yesterday is only to do with STT, because everything else in the budget was fantastic. This data center tax concession to propel investments in data centers. We've always been supportive to any tech trend in IT services, in cloud services. Everywhere we've been a supporter. So I think in AI also we have to be a supporter and create an AI services boom. So I think that step was a step in the right direction.
Well, just about 4 minutes left before we wrap up trade. Just watch for UPL. Came out with numbers a while back. Looks like a good set of numbers. The company's top line went up by 12%. EBITDA increased by 13%. FY26 guidance has been maintained. And there is a healthy reduction in the company's overall leverage. And that stock has moved to the day's high, 5.5% up on that. Latent View is another stock reacting to the numbers, so 11% gain. While Misho, which has reported a big loss at the bottom line, nearly 500 crore, stock is under pressure. Amrish, you want to give us, Uno Minda is, of course, one stock that you like, but anything else that's got your attention post-budget? There are lot of data plays like Anantraj, Lodha Developers moving up. What looks attractive to you?
See, I think most of the developers, I think, will start looking at data centers as an annuity business going ahead. So that's something to be watched out for. Because clearly this tax which is given is a huge advantage, which I think most of the developers will take advantage of, because most of them are sitting on land banks. And end of the day, data center requires land bank.
What about Angel One, Nuvama, BSE Limited? They got spooked yesterday. There was a violent correction in the stocks, but today they rebounded. Was the correction on account of STT overdone? What does your analysis say?
Yeah, I mean, because of STT, we saw that major reaction. But then, I mean, the sort of a tax on F&O, the increase in STT is more like the sin tax. I mean, do people stop smoking or, drink less liquor if the taxes are increased? I mean, that's the same thing with F&O. I mean, once you get used to it, whatever said and done, you'll come back. You'll still pay higher taxes. If you're not able to pay those higher taxes, you'll possibly go in for the unofficial market, which, I mean, I think all of us know that it exists. So they are not going to leave, trading. I think the finance minister thought of something else as an entry barrier. Maybe the NISM exams and refresher courses to continue to trade, than increasing, the STT, which is going to affect everyone. I mean, right up to the institutions. It's going to affect, every other large player.
Yeah, there's no distinction between gambling. I mean, you're using F&O for gambling or using it as a hedge or insuring your portfolio. So that distinction is not there.
Okay, all right. Amrish, very quickly, you want to tell us about the metal stock that you like?
Metals, I still like Tata Steel. I mean, I would like to stay away from those huge volatile stocks like Hindustan Zinc or Hindustan Copper at this point of time. I think that move is over. Tata Steel, I think, can still move to levels of about 250 to 260.
Okay, all right. Amrish, stay with us. We'll just wrap out things and come back to you. So it's a good-looking screen, and 265 odd points higher is what you have. 26,090. So it is counting down. In green across the board. Market breadth is still slightly negative, but it's a long list of volume-led gainers here. 2580, Nifty Bank 58,560, Sensex at about 81,620, and the mid-cap index up about 1.25% or so as well. So those are broad indices that we are looking at. Sectorally, capital markets, CPSE, and autos were the three areas where we saw action coming through. Wix, of course, cooling off after yesterday's spike that we had. Nigel has walked across to the big wall, wrapping up more single stocks and what really happened. Nigel, over to you.
Well, beautiful looking screen. Who would have thought the Nifty goes home with a gain of around 250 points? And just take a look at the Nifty Bank. That one as well, you know, from trading in the red, that's seen a big recovery. But the reason your portfolio is going to be feeling good is because both the mid-cap as well as small-cap indices, they did well. And the one that we're looking at the bottom of your screen, the advanced decline ratio, ending pretty much even, Stevens. I'll tell you what, at the start of the day, this advanced number was close to around 400 stocks. That's ending close to around 500 stocks. But plenty of movers from the markets, from the Nifty pack. You had Power Grid. That stock was booming away. Tata Motors, that stock as well was up close to around 4% in trade. And throw in there in Adani Ports as well as Tata Consumer. So there was no sectorial trend that played out. But from the Nifty pack itself, plenty of winners out there. However, there were some losers as well. And those losers actually have been outperformers. Shriram Finance comes up for you on the screen. Axis Bank is another one actually that should come. Let's get some losers as well up. I know it's more or less a green day, but we should get some of these losers up. And Max Health as well. That one did end in the red in trade. A few more losers from the broader markets. PB Fintech, you know, reacting to the news that Yash put out that they could be looking at some inorganic growth, probably a large size one as well. So that stock ended with a bit of a cut in trade. BDL, that's Bharat Dynamics, is trying to pull back, but that got sold into, so that was lowered in trade. And because crude oil prices did correct, you had ONGC as well as Oil India. Both of them were lower in trade, and they were lower in trade actually from the word go. Keynes, that's the other stock from the AMS pack that actually was underperforming today. Stock ended with a cut of around 4%. But let's go on with the list of winners then, and plenty of them today actually. You had Hindustan Zinc from trading in the red. That one goes home with solid gains. Silver recovered. Hindustan Zinc as well took a cue from there. So that's why Hindustan Zinc was up close to around 7%. Premier Energy as well as Wari Energies, both those two stocks, they've seen a sharp correction in the last few trading sessions. Today they said, let's be part of the party. Both of them up between 5 to around 6% in trade. UPL came out actually with a rather good set of numbers. So that stock was chugging along. In fact, it ended at the high point of the day. Keep in mind, this is one of the stocks actually that has underperformed over the last few years. But today it said it's time to participate. And BSE, one of the biggest casualties of yesterday, all that talk about STT, BSE says, let's recover half of the losses that we saw yesterday. Stock, in fact, was up close to around 5%. Let's wrap it down then with some of those refiners. You had Chennai Petro as well as MRPL. Both those stocks did pretty well in trade. So net, it was a good trading session, actually. Surprise, surprise, the Nifty goes home with solid gains in trade. And as I said earlier, this number actually was the biggest positive. The number of stocks advancing at around 1,400. Who would have thought your portfolios feeling good? Guys, not such a bad day.
Well, great day, and that screen is looking very good, Nigel.
It's all green.
You don't miss the down.
We could continue.
Okay, we'll take a quick commercial break here. It's a wrap on closing bell from Nigel, Rima, me, everyone on the team. Thank you very much for staying with us. More comes up on the other side. Markets forward, Ambarish is with us. We'll pick up on that in just a bit.